Gold is trading above $5,100 an ounce today. Oil has surpassed $100 a barrel, and the Strait of Hormuz, the jugular vein of the world's oil supply, has virtually shut down. This is not a hypothetical scenario. This is happening right now, this week, as you watch this video. In late February, the US and Israel launched coordinated strikes against Iran. Supreme Leader Khamenei was killed. Iran retaliated and blockaded the Strait of Hormuz. Within days, the global energy market was turned upside down. In this video, I'll show you what is really happening with gold and oil, why it directly affects your financial life, and where markets could go in the coming weeks. Stay until the end. I'll give you 3 concrete scenarios and what to do in each one. Gold entered 2025 around $2,600 an ounce and hit an all-time peak of $5,595 on January 29, 2026. Today, it sits around $5,150, still 75% above where it was just 1 year ago. What is pushing gold higher? 3 forces rarely seen together: central banks buying by the ton, 230 tons in Q4 2025 alone, geopolitical conflict driving safe haven demand, and Fed uncertainty keeping rates high even as inflation rises. On top of that, China, Russia, India, and Turkey are systematically buying gold to reduce dependence on the US dollar. Goldman Sachs and JP Morgan project gold could reach $5,000 to $5,500 by end of 2026. Now, oil, and this is where things get truly alarming. Brent crude was around $60 before the February conflicts. Within days, it shot to $98. Today, it's approaching $100 again, with analysts warning of $120 or more if the conflict deepens. The reason? The Strait of Hormuz, a corridor just 21 miles wide through which passes 20% of the entire planet's oil consumption. Since the conflict, traffic dropped more than 90%. The IEA estimates the world lost roughly 8 million barrels per day in March, the largest supply disruption in history. G7 nations released 400 million barrels from strategic reserves. Markets weren't convinced. Prices kept climbing. The impact is direct. Oil above $100 means higher costs for consumers, inflation accelerating from 3.8% towards 6%, and rate cuts getting pushed further out. Geopolitically, this is not a one-off crisis. It's the acceleration of a global order reorganization. 3 blocks are reshaping the chessboard. The Western Bloc, US, Israel, NATO, who launched Operation Epic Fury to eliminate Iran's nuclear threat. The Eurasian Bloc, Russia benefits from blocked sea routes, while China seeks a mediator role. And the emerging world, India, Saudi Arabia, and the Gulf states, all caught in the middle, vulnerable but not powerless. Now, the 3 scenarios. Scenario 1, quick ceasefire, 30% probability. Oil retreats to $70 to $80. Gold consolidates between $4,800 and $5,200. If this happens, expect a 10 to 20% pullback in gold and sharp declines in energy stocks. Scenario 2, prolonged but contained conflict, 50% probability, the most likely outcome. Oil between $95 and $120, gold between $5,000 and $5,600. Inflation accelerates. Inflation-protected bonds and gold exposure makes sense here. Scenario 3, regional escalation, 20% probability. Oil surpasses $150, possibly toward $200. Gold breaks $6,000. Global recession becomes real. In this scenario, real assets outperform everything. Quick disclaimer, nothing here is financial advice. Consult a certified professional before any investment decision. So, to bring it all together, gold is 75% higher in 12 months. Oil exploded from $60 to $100. The world is at a true geopolitical inflection point. And for investors, inflation is rising, rates stay higher for longer, and opportunities exist in commodities and inflation hedges. If this was useful, drop a like and subscribe for our next update. I'll be covering silver, the dollar, and how central banks are reshaping global reserves. Until the next one, this is XAU Decoded, and the market waits for no one.